Greetings. I am Whitney Loman Kane II, a senior, a senior at Morehouse College, matriculating towards my degree in applied economics. In the near future, I will become a venture capitalist. Robert Kiyosaki said, "It's not about how much money you make, but it is about how much money you keep. How hard your money works for you, and how many generations you keep that money for." I was introduced to that quote in high school. You see, at the time, I had no prior knowledge of financial literacy. After becoming curious about what it was, I began to research investing. As soon as I turned 18, I started putting my money into the stock market. Once I came to Morehouse, I started to think deeper about investing, and it made me wonder, are stocks really the starting place for investment? This is when I was introduced to venture capital. As a college student, one very valuable lesson that I've learned is that it's not beneficial to trade time for money. This is why we must learn to trade money for money. It doesn't even have to be your own money. Don't you think it's time that you let your resources work for you? Today, we will look first at exactly what venture capital is. Then, we will look at how venture capital funds work. Then, we'll explain the various types of due diligence. And finally, I will explain to you how exactly venture capitalists make their money. Venture capital, described in an interview by Ariel Alexander, who is a current intern at a VC firm, is private equity or financing that involves investors with high levels of capital or experience. These giants invest in the companies that they believe have the potential to grow. Investopedia would add investing in companies that have grown quickly. Everyday investors like you and I, we buy preferred shares. Investopedia also detailed that this is a safe investment that comes along with dividends and investor rights. Venture capitalists, on the other hand, have common stock. Common stock is a form of ownership of a company. This comes along with voting rights. In the fourth edition of Venture Deals, it explains that venture capital funds are structured with three main entities: the company, which manages the funds; the limited partners, which tends to the investors; and the general partners, which is the legal entity of the fund. These will be the leaders of your team, and together, these entities make huge deals. In a venture capital deal, pieces of ownership of a company are created and sold to investors through limited partnerships. Due diligence is the review process of an investment under consideration. In a lecture on venture capital, Rashawn Williams broke down the three main types of due diligence: financial due diligence, technical due diligence, and legal due diligence. Financial due diligence reviews all the financial statements, financial planning, and audits to determine the value of a company. Technical due diligence reviews intellectual property, competition, and quality of service. Lastly, legal due diligence consists of reviewing governance, investment documents, and contracts. Now, it's okay if you don't know how to do all of that. We can always outsource our due diligence teams. Combine these three types of due diligence help determine if a company is worth investing in. Finally, what we've all been waiting for. How exactly do venture capitalists themselves make money? According to the 4th edition of Venture Deals, venture capitalists' salaries come from the management fee of the fund, which is usually around 2% a year. However, the real money comes from carried interest, which is usually around 20% of the profit. Essentially, the bigger the deal, the bigger the return, the more money in the pockets of the limited and general partners. With deals in the 100 millions and profits 2 times that or greater, we can make a very pretty penny as venture capitalists. In conclusion, we know that venture capital investing is a great career. It not only establishes ownership, but it also practices making your resources work for you, as described by Robert Kiyosaki in the introduction quote. We know how to structure a venture capital firm by building a team, and we also know how to go through the various processes of due diligence: financial, technical, and legal. When we apply the information that we've learned today, we can all be successful venture capitalists. My name is Whitney Loman Kane II. Thank you.